Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the week. What do we got going on in the markets? Well, the Dow's down a couple hundred, NASDAQ's down 100. You know where the S&P is? Well, of course you do. It's sitting right at 4,100. There is so much complacency in this market. It just will not go away from the 4,100 level. Think about it. If you went to sleep 6 weeks ago, you wake up today, it'd be like nothing happened. We're right where we were then. If you went to sleep 2 years ago, you woke up today, you would think that nothing happened because we're right at the same level. 4,100. Now, I do think that there's going to be a big downward drop in the stock market, about 20%. I think we're at the 4,100 level. I think we're going to come down and retest October lows of 3,400. Now, the VIX is telling us that it's extremely low right now, okay? So the VIX, if you go out a month, 2 months, you'll see the options. There's about 10 times more calls than there are puts on the VIX. People think that the VIX is going to go higher. When the VIX goes higher, it's a volatility index and the market comes down. Now, when the market has this much complacency and stays at the same level, the 4,100 level on the S&P, it's building up energy for a big move. Now, a lot of people think that big move is going to be higher. They think that the bull market's going to take off from here and we're going to rally up higher. That's not my take. My take's we're going to come back down, retest the October low. Now, we'll see how that all plays out. But I do think a major downturn in the market is coming. Now, today I want to talk about, well, let's get over to the real estate market and talk about that, because that's what I want to talk about today. It's Friday. Why not? Okay, so everybody, knows my claim. I think we're going to drop by 50% from the highs. Now, people are upset with this. Nobody wants to hear that their house is going to go down by 50%. Now, it's already down about 10%. Of course, not in your area. Your area is still going higher. And I get that, but I think that we're going to come down 50% off of the highs. This is a big claim. Now, I don't know any more than you know. I mean, this is, to me, is just common sense. Look, if there's an average, a long-term average called the mean, all right, and we're going to drop back to that. It's about 40% lower than where we're at right now. And we could overshoot to the downside if it starts to get really bad. I want to talk about that. I want to talk about what could happen. I think the whole financial system is in jeopardy right now. I mean, we got the big debt ceiling coming, right? Okay, and they got to keep this con game, as I would call it. They got to keep the con game going. The con game being that, that they got to keep you believing that the debt's going to be paid off someday. This debt is never going to be paid off. We're beyond that point. We're long past that point, but we're at $32 trillion. And I think this is the biggest Ponzi scheme the world has ever seen. Bernie Madoff has nothing on us. I'm telling you, this is a large Ponzi scheme. They cannot pay this debt off. Now, they want to raise the debt ceiling and they want to do it relatively soon. Janet Yellen says we have to do it by June 1st. Otherwise, catastrophe will happen in the world financial system. Now, I believe she might be right on that, but I think catastrophe will happen even if we raise it, because when you raise it, you just get farther and farther in debt, and the catastrophe will be bigger when it happens. Now, when will it happen? Nobody knows that for sure, but I don't think it's that far away. I think it's getting a lot closer than a lot of people think, and this is scary stuff. Look, we got $32 trillion in debt. Well, what's that? What are bonds paying right now? They're paying about, 4 or 5%. So let's just do rough numbers. Let's go 30 trillion times 5%. Well, that's $1.5 trillion every year just to pay off the debt. We're going to have to take that out of the tax collections. We collect about between $3.5 trillion in taxes. So we're going to have to take that out. So it's going to be about half of the money we bring in taxes just goes to pay the interest rate on where the debt is now. But we want to get that debt up higher so that when we bring in tax revenues, 100% of it can go and pay off the debt. Well, I'm being a little facetious, but that's the direction we're headed, because we have $100 trillion in unfunded liabilities. Things like Medicare, things like Social Security. Old people like myself, we're going to want those things as we get older. We're going to want them because we paid into Social Security. And there's no money. Their Social Security's pretty much bankrupt, and Medicare Medicare. We're going to need some, Medicare because we're getting older. Okay, we're going to want that. Now, the Federal Reserve, they got $9 trillion on the balance sheet right now, $9 trillion. Okay, now $3 trillion of that is mortgage-backed securities. Okay, so they're propping up the housing market. They're propping it up, and they're going to have to continue to prop up the housing market, or we're going to start to drop lower at a faster rate than we're dropping. So they're going to continue to print money to buy more mortgages and to prop up the rates, because the mortgages get bigger as the numbers get bigger. If the house values go up, mortgages go up. They own $3 trillion of them. Now, they say they're going to sell those. If they start selling those, the houses could drop really fast. Be careful of that. All right. So now we got all this debt, right? And we got taken half of the tax budget to pay just the interest. Okay. We're in a lot of trouble here, but we got this inflation number. Now, everyone will say, but Mike, inflation's coming down. We just got the number. It's only 5%. Okay, we'll use 5%. That's their number now, the government's number. Admit the core is 5.5%. Now they take out food and energy because those things have gone up too high, so they don't count those anymore. They only count things they want to count now. If you measured it back like in the 1970s, the inflation rate by the Fed's own way of measuring it back in the 70s would be closer to 10% than it is to 5%. All right, so now they got rates of raise the interest rate up to 5%, but that inflation number is getting kind of sticky right there. Now, here's my other big claim. Okay, we were at 9% and we came down to, they call it 5% right now. My claim is that inflation will reach above 9%, even the way the government's measuring it. Okay, so let's say that we go from 5% to 10%. We overtake that 9% that we had before, because inflation, it comes in waves. And the second wave of inflation will hit. Now, how soon? I'd say by the end of the year, it's going to be hitting pretty good. All right, so we're going to get a second wave of inflation. This is just my opinion that we're going to push that above that 9% number that we had before. All right, so let's say we get inflation up to 10% by government standards. Well, really, that'd be closer to 20%, because the government has a way of measuring inflation that pretty much cuts the number in half. So when real inflation would be up around 20%, 20%. Wow. But you see, now we're at 5% rate right now. And that's why inflation's sticky here. You would think that inflation would be coming down because we're at 5% on the bonds and inflation's at 5%, so it'd be coming down. But that's not really where we're at. Inflation's really at about 10% and we're at 5% on the bonds. So if you really want to fight inflation, you'd have to get that bond rate. You'd have to keep raising the interest rates up to about 10% to battle the inflation, right? To battle that inflation. But right now they can't battle inflation because they can't raise above 5% because the U.S. will default on its debt. Okay, so that's a problem, right? So they're going to have to lower interest rates. And when they lower the interest rates, that inflation is going to run rampant, because when they lower the rates, they're going to continue to print money. Now, why are they going to continue to print money? Well, because the government can't stop spending. We cannot. As the day we stop spending, the day we just cut out all debt and don't increase $1 more, the whole thing's over. The whole Ponzi scheme that I'm talking about comes crashing down. The stock market comes down, the mortgage market comes down, the bond market, everything just crashes. And of course, your house, except in your area, your house will stay up. But in most areas, the housing market will come down, at least down to that mean where it's down about 40% from where we are now. We'll drop down to that. And I think we're going to overshoot that when this all plays out. And this is just my take once again. This is just my opinions, if you will. Now, okay, so what do we do to protect ourselves from what the government is doing to us? Well, the government's printing all this money, right? And the inflation number, they say it's 5, I say it's 10. We'll go with their number 5. But even at 5%, you're losing 5% of your net worth. Every year goes away. You do that for 3 years, you lost 15%, but I think it's really closer to 10%. And it's going to be back up higher. So how do you protect yourself? Now, people, they say I'm wrong on this. Everybody everybody says I'm just a crazy old guy talking crazy stuff. And I'm okay with that. I'm okay with that. But how do you protect yourself? Well, I think you buy some gold and I think you buy some silver. Now, silver is what I really like. Down $1 yesterday, down below $24 today, right? For 1 ounce. $24 for 1 ounce. Now, my big claim is that 500 ounces of silver will buy you the average price house after this all plays out. And that's how you'll know that we're done playing out, because you can take 500 ounces of silver and go buy yourself the average house. Well, what does the average house go for right now, Mike? Well, it goes for about 400,000. Well, how much would 500 ounces of silver be? Well, let's just use the rough number, $25, right? All right. 500 ounces would be about $12,500. $12,500 is going to turn into 400,000. Well, I didn't say that. And that 400,000 I do think is going to come down to about 200,000. And yeah, those 500 ounces of silver could come up that much. Now, I know that's crazy. People will tell me in the comments, Mike, that could never happen again. It can't happen again. It happened in 1980, right? Well, actually, 1980 was 800 ounces, but I think this time's worse. So I think we'll overshoot more of the downside. So I think 500 ounces will be enough. But let's say it's 800 ounces like it was in 1980, okay? People tell me, Mike, there's no way that could happen. And they give me the reason for that. They give me the reason. They tell me because of Bitcoin. Bitcoin has taken all the luster off of the gold and silver markets. And, I got nothing against Bitcoin. Maybe it has. I don't know. But I'm going to bet on gold and silver. That's what I'm betting on. Now, if you talk to Michael Saylor, he's telling you that Bitcoin's going to go to $2.5 million for one Bitcoin. $2.5 million. Now, that'd be much better, because if it does that and houses go down to 200,000, well, heck, you could buy like 12 houses, 12 average houses with just one Bitcoin. Now, you can believe Michael Saylor. I got no problem with him. Maybe he's right. Maybe Bitcoin goes to 2.5 million. That's just not what I'm betting on. I'm betting on the silver market. Silver's drastically undervalued. I believe gold's drastically undervalued. Now, my prediction for gold, people don't like this one either. I think gold's going to go 1-to-1 with the Dow, right? What's the Dow at right now? About 33,000. Well, Mike, an ounce of gold's not going to be 33,000. Now, I didn't say that. I said they're going to be 1-to-1. Now, I think that number is going to be closer to 6,000. That's right. I think the Dow Jones is going to come back down to 6,000. Isn't that crazy? That's just crazy talk. And on a Friday, Mike, you're talking, you just got out to left field. What's going on today, Mike? Well, I think it's going to become 1-to-1. Now, when was the Dow and an ounce of gold, one of the Dow, they were 1-to-1. When did that happen? Well, it happened in 1930. Okay, did it happen again? Well, yes, it did. About 50 years after that, in 1980, it happened again. The Dow went 1-to-1 with an ounce of gold. Okay, now about 50 years after 1980, when would that be? It'd be about 2030. Where are we at right now? 2023. I think by 2030, an ounce of gold will get you one of the Dow. Now, I know this is crazy talk, and I know it's Friday, but this is just the big claims that I believe. Now, you believe what you believe, and I want you to talk to other people. Don't listen to me. I don't know anything, and I'll be the first to tell you that. But this is just my take. Now, I think unemployment's going to go way up. Now, the way they're measuring it right now, we're at 3% unemployment, but I got friends out there that have lost their jobs. We're losing about 1 million jobs every month, 250,000 new jobless claims just yesterday, right? So 250,000 a week. Let's think about that. That's about 1 million jobs a month going away. But unemployment's at 3%? Really? Well, maybe their numbers are right. But I don't think so. I think unemployment's going to get to about 10%. I think this recession is going to be the worst recession I'll ever see in my lifetime. And yes, I do think it could possibly turn into even a depression. I don't want to depress anybody on a Friday by saying the D word, but yeah, I think we could get a depression. Look at the yield curve on the interest rates has never been more inverted. Inverted just means that, a 3-month is paying more than the 30-year. I mean, that's crazy. That's crazy. But you see, a 1 month is really paying a lot because people think we're going to default on the debt right now. Now, we're not going to default on the debt. We have a printing press. I guarantee you we don't default on the debt. We are going to print trillions and trillions of dollars. Going to send that inflation number way way up. This whole thing, it's in jeopardy. The banking crisis, look at PacWest will probably go down over the weekend. I mean, their stock just in free fall again. I mean, these banks are in big trouble. And it's a domino effect. I expect 50 to 100 of these banks to go under before this whole financial crisis is just playing out. And people don't like to say that word, financial crisis. You won't hear mainstream media say financial crisis. I think they'll get fired if they say that on air. They can't say financial crisis. We're in a financial crisis. Could turn into a depression. Could turn into the Greater Depression. Oh, Mike, you're being so negative today. This could never happen. I'm telling you, it can't happen. We have the reserve currency. We're the United States of America. We're the superpower. Look at, if we don't get our act together, if you don't start voting in some officials that understand economics, that understand business, that understand finance, that you cannot print yourself into oblivion and expect everything to be okay. Look, you got to get rid of them, but it's going to do a lot to the housing market. A lot of people think that the housing market is going to the moon, housing to the moon. People can't afford it right now, so I don't think it's going to the moon. I think the housing market will collapse. I think it's going to collapse down to the mean, which is about 40% lower than we're at right now. Now, I got carried away today. It's a Friday. I want everybody to get out there and have a happy weekend. I hope I didn't depress anyone. Give me the thumbs up. Why not? But really hit that subscribe button so I can talk to you again next week. I'll try not to depress you. Bye-bye now.